Welcome to the Daily Brief, where we'll go over the highlights in the market for Wednesday, October 19th, and then see how things look for the highlights for Thursday, October 20th. And we had a down day. Fortunately, it hasn't done a lot to really hurt the technical picture that has been looking to improve. But ultimately, we're going to have to see some follow through buying because that's really price is king when it comes to the market. You can have all your indicators, you can do all your analysis, but if price doesn't go in the direction that you want it to go, it really doesn't matter. Okay, so let's go back and talk about what happened. Right at the open, we did have a lower open, but we rebounded after that. We went up to the daily pivot at 37.23. That ended up acting as resistance. We tried to peek our head a little bit into positive territory because the daily pivot and the unchanged level were just about at the same point, but that was as high as we were able to get. Prices then ended up falling below S1 at 36.83. They even went below that, and then they rebounded to go back above S1. And then we just kind of drifted sideways going into the close. We ended up being down 0.67%, so 2/3%, on below average volume. We've got some folks that are just kind of sitting by and going, okay, these advances that we've seen, are they for real? You've got other sides saying, nah, these advances are just a dead cat bounce. We're just getting ready to go lower. Well, there's really not a lot of conviction right now as you have a lot of wait and see going on. The technicals were looking still okay and turning more positive in the short term, not as much in the intermediate and long term, but we are seeing some improvement there. Inflation and interest rates, as I say, it seems like every time I do a video, that's the fixation that the markets are on. We've got the whole list of geopolitical concerns. Things seem to be, of course, we've been taking an every other day approach with the UK. We had a good day, so was Thursday going to be a bad day in the UK? We'll just have to see how things play out there. We do have earnings coming out, and there were some positive earnings that came out in Wednesday's session, but they didn't really help all that much. And then we do have a little bit of Fed speak that I'll go through here. So what's really hurting the market right now are rising interest rates. That's putting a lot of pressure on stocks. And then here's the Fed speak where the Kashari came out from Minneapolis. Apparently, this person will be a voter in 2023. And he said that he could argue for the Fed funds rate to go to 3.75. That would be raising the terminal rate if he doesn't see any improvement in core inflation. That's the CPI. They came out with the headline number. Then they take out the things you need, like food and energy, and then they recalculate it. And that is more of the inflation rate that the Fed pays attention to. So that is not necessarily a friendly comment. Earnings came out, as I said, from Netflix, Travelers, United Airlines, ASML. They were taken as pretty positive, but they didn't give a lot of support to the market. The 10-year note, which has been at 4%, now is at 4.13%. The 10 to the 5, 10 to the 2, 30 to the 5, those yield curves are still inverted. If you watched yesterday's video, the 10-year to the 3-month did go inverted. Well, it slipped back to being more normal, but it's not normal by all that much. If things get out of whack in Thursday's session, that could go back to being inverted. Sentiment is still fearful, but not necessarily extreme fearful. Oil prices continue to rise because there's this ploy going out there now. You would think that prices would fall, but they're tapping into the strategic petroleum reserve, which is supposed to be for an emergency. And elections are not an emergency, but they don't seem to matter right now. They want to do anything they can to try to lower gas prices before the election, realizing that this isn't going to lower them all that much, and that right after the election, gas prices are going to go right back up. And then that oil needs to be replaced, and it'll probably be replaced at much higher prices than when it was originally purchased. So, and this should not be political, in my opinion. This is something that we need that's in reserve, that if we run into a military action, we need to be able to defend ourselves, and we need fuel to be able to do that. We can't use this in a way just to try to sway an election. At least that's where I come out with that one. All right. We did have the weekly MBA mortgage applications index that came out down 4.5%. That has been on a more continual decline. Last week, it was down 2%. Housing starts were down 8.1% on a month over month basis. And you try to seasonally adjust this to a rate of 1.439 million, which was a little bit less than the 1.465 million that they were hoping for. Building permits rose. This can be a bit of a leading indicator, although they didn't rise all that much. They were up 1.4% on a month over month basis and a little bit more than what they were expecting. Our trend is negative and starting to weaken. The ADX is ever so slightly dropping below the moving average, but we're still above 20. I'm keeping our bias at mixed because it wasn't a real strong down day, but we need to see follow through buying to turn that back to positive. I'm keeping our momentum at mixed because we had a couple of good up days after a significant number of down days. So we're still kind of at that tipping point right now. Here's our coincidental indicator just to update you on this, unless you follow baseball. And I did change that to the NLCS. The series is tied right now. Now, this is not the World Series. This is the championship series to see who goes to the World Series. But right now, Philadelphia and San Diego are tied at 1 apiece. So what's our outlook then for Thursday? We're still showing our technicals are improving, but we need to see follow through buying. That's ultimately what needs to happen. We have jobless claims coming out, the Philadelphia Fed survey, and leading economic indicators coming out. And then kind of the biggie will be existing home sales. So we'll get some more housing data. And then the whole list of geopolitical events and inflation and interest rates are what the market's really concerned with. They're really watching. That really had an impact on Wednesday's session. But at any time, any one of these could shoot to the top and really start to freak out the market. Or to make it even crazier, there could be something that happens on here that isn't even listed. So what are our scenarios? You could suggest that we're still going down because a lot of our indicators are still negative, but they're turning more positive if we see more buying. Well, you could go with an up scenario because things are looking better, but we need to see more buying for them to turn even more positive. You might even be able to make a case for number 3. I thought about making that gold too because the ADX is weakening. It's below the moving average, which if you're more aggressive with that indicator, you are neutral now. But if you are more conservative and want to wait for the ADX to drop below 20, you're not neutral at this point. So our conclusion is the S&P, it's turning positive if we see more buying. We've got to see higher prices. Short-term and intermediate term, they're looking better, but if we see more selling, we're going to lose that. Long-term, we're still negative because we're well below the 200-day moving average. So thank you. Have a wonderful day. We'll see how Thursday's action goes. If it ends up being a real yawner of a day, I may just do a daily brief. If there's some real changes in our charts, I'll go ahead and do a full-length video.